Hello, and this is Global Business Insights, where we look deeper at the headlines from a business perspective. In oil markets, risk premium is back with a bang as West Texas Intermediate goes up over 3%. All parties on high alert, as we saw in Iran, Ismail Haniyeh, Hamas's political leader, killed in a raid. Earlier, the Israeli Defense Forces struck a Hezbollah stronghold, reportedly killing Fuad Shukar, the Shia militia's most senior commander, who was reportedly behind the recent raid on Israel that killed 11 young people, including children. The Federal Reserve Bank held its FOMC meeting today, holding rates steady as expected. The statement, however, says inflation has eased over the past year, but remains somewhat elevated. Only very incremental or subtle changes in the overall statement, but still no clear nod for a rate cut in September, preserving full optionality. Also earlier today, the Bank of Japan raised unexpectedly the overnight call target rate to 0.25% from 0 to 0.1% in a 7-2 vote. It also decided to reduce monthly bond buying to 3 trillion yen, that's $19.6 billion from the current 6 trillion yen. China's manufacturing activity slipped to a 5-month low in July as we saw the PMI, Purchasing Managers Index, contracted for a third month, easing to 49.4 from 49.5 in June. The Eurozone economy grew more than expected in Q2, up 0.3%, and after it grew 0.3% over the first quarter, still a tepid recovery. The German economy, however, shrank 0.1% in the second quarter, undershooting expectations. Inflation in Germany also accelerated in July, with consumer prices rising by 2.6%, also higher than was recorded in June, when prices rose by 2.5% year on year. The annual inflation rate in the euro area unexpectedly edged up to 2.6%, also in July 2024, from 2.5% in June, compared to forecasts of 2.4%. Cost of energy is notably up 1.3%, way above a 0.2% rise in June. Microsoft reported decent results for its June quarter, with revenue up 15% to $64.7 billion, while earnings rose 11% to $2.95. But Azure cloud computing unit underperformed expectations. Microsoft shares opened in the red on markets. Meta Platform is going to report later today after the bell, followed by Apple and Amazon on Thursday. US private payrolls rose by a lower 122,000 jobs this month after advancing by an upwardly revised 155,000 in June. Economists had forecasted private employment would increase by 150,000 positions after a previously reported gain of 150,000. And in Liberia, the president, Joseph Boakai, has suspended the central bank governor after an audit of the financial regulator revealed irregular loans and contracts. Jolue Aloysius Darliu had been placed on leave until the review is concluded. Welcome back. The narrative of falling crude prices suddenly changed after Israel carried out 2 strikes yesterday. The first killing Hezbollah senior commander Fuad Shukar, and the second killing Hamas political leader Ismail Haniyeh. The 2 strikes are expected to mark a significant escalation in the regional conflict as all parties are on high alert. Both WTI and Brent had been falling consistently for a month, hitting 7-week lows earlier yesterday, even after the Hezbollah rocket attack on the Golan Heights. So far, markets seem to have absorbed the shocks of inching escalations in the Middle East, despite being intermittently exacerbated by trade disruptions caused by Yemeni maritime attacks and several hostile incidents between Israel and Iran or Hezbollah. Even today, the reaction of oil prices have been modest, as so far there have been no supply disruptions, but that can change. Analysts see at least $5 premium to start with, but as supply is disrupted, as could easily be the case, a combination of risk premium and supply shocks can quickly send prices to the 90s. EVI in its analysis in January had projected an average of $75 to $80 for Brent crude this year, driven by lackluster global economic activity and weaker tepid demand at best from China and Europe. The hard-to-predict geopolitics can upend most projections. For now, it's volatility, a lot of uncertainty, and panic buying, as traders have to assume that escalation will potentially impact the oil supply chain one way or another. The Federal Reserve Open Markets Committee just concluded its meeting. Here's a clip from the press conference by Jerome Powell.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As the labor market has cooled and inflation has declined, the risks to achieving our employment and inflation goals continue to move into better balance. Indeed, we're attentive to the risks to both sides of our dual mandate. We have stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. The second quarter's inflation readings have added to our confidence, and more good data would further strengthen that confidence. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks.
Well, there are no surprises, really. It was an unanimous decision. Powell reiterated its data-dependent, extra cautious stance, neutral on when they would cut interest rates, but also not taking a rate cut in September off the table, being careful not to go ahead of the data. This statement will not change the bets, I think, on a September cut. For its just ended fiscal year, Microsoft's capex was up nearly 60% to $69 billion. Microsoft has been infusing its AI technology from partner OpenAI, including digital assistants called co-pilots that can summarize documents and generate computer code, emails, and other content, as well as selling Azure cloud subscriptions featuring OpenAI products. Microsoft had warned operating profits would narrow a bit given these major investments and development bets around artificial intelligence. Also, competition in its cloud computing stronghold was weighing on revenue growth. The result in the June quarter, operating margin was 43.2%, narrower than the 44.6% margin for the full fiscal year. However, strength in the Microsoft cloud sector still led to decent results, with revenue at $64.7 billion, up 15%. Operating income was $27.9 billion, up 15% as well, while earnings per share was $2.95 and increased 10%. But still, Microsoft shares fell in extended trading after it reported disappointing cloud revenue, which overshadowed stronger earnings and revenue. Microsoft Cloud quarterly revenue of $36.8 billion was up 21%. Azure, the cloud arm, posted sales growth of 29%, not bad, but still missed analyst forecasts and Microsoft's guidance for a jump that could reach a 31%. So that's a bit of an issue there for investors. Also, the technology giant yesterday apologized after thousands of people across the world reported issues with its products ranging from email service Outlook to the hit game Minecraft. This comes less than 2 weeks after a major global IT outage left over 8 million computers using Microsoft systems inaccessible after a flawed software update by the cybersecurity firm CrowdStrike. Liberia President Joseph Boakai commissioned an audit of 3 key government institutions, including the central bank, after taking office in January, later announcing that the central bank governor, Jolue Aloysius Taliu, will be suspended indefinitely. This came after release last week of the General Auditing Commission's report. The report, which focused on the period from 2018 to 2023, found several irregularities within central bank lending to the government, including irregularities in the way contracts were awarded. The bank's management also exceeded approved expenditure limits during the 5-year period. This week, Biden lamented that the Supreme Court in the US was overdue for comprehensive ethical reforms. The proposal he's calling for includes a code of ethics binding justices to refrain from political activity in public and to disclose gifts they receive, among other issues, as irregularities were also discovered. In Africa, the Supreme Court, the central bank senior officials, and the highest bodies and oil and gas regulatory bodies provide the institutional stability, and I think they are very much in need of ethical reform if they are to be able to discharge their roles. Not just Liberia or Nigeria, South Africa, Egypt, Kenya need to also initiate ethical reviews to establish whether rules are adequate. We tend to be shocked when we read what happened in Liberia, but this may only be the tip of the iceberg. The Liberia action is driven by a new suspicious incoming administration, somewhat similar to the situation we saw in Nigeria. Biden's initiative is being delegitimized as politically motivated, but the reality is that strong ethical guidelines will protect players not just from being tempted to stray, but will promote regular ethical reviews and independent audits, which may keep judges, central bank senior officials, and regulators on the narrower path. European markets maintained upward momentum after Eurozone inflation unexpectedly inched up. At midday today, the major US benchmarks were on the upside, with the Nasdaq leading the way amid a surge in semiconductor stocks. US markets are digesting today's Federal Reserve decision, keeping interest rates steady and scrutinizing any hint at forward guidance. Markets inched somewhat slightly higher, but not significantly after the release. Microsoft, as we speak, down 1.02%. Tomorrow we have a special edition focused on Nigeria. That's the June Stanbic S&P PMIs to be released at 8:45 GMT. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please send your comments. Again, thank you so very much for watching. Bye-bye.